Hi, everyone. Welcome to the Venture Studio webinar. We're so excited to have you here. I see people are starting to come in. And yeah, I'm super excited and looking forward to the session today. Um, just to quickly, before we get started here, so my name is Mirto Lalakos. I'm a principal at VC Lab. VC Lab is the world's largest accelerator for for new and emerging VC funds all around the world. We help new managers or emerging managers, so managers who are on fund 2, 3, or beyond, kind of get to a close for the funds that they're raising. And we've been doing this for about 4 years now, which is crazy. And we're already helping to launch 60% of the world's new and emerging VC funds, which is crazy. So our mission is to democratize access to venture capital. And we do that in several ways. And VC Lab is actually a part, it's kind of like a subgroup of Decel Group, which is kind of like the umbrella parent company here. And everything we do at Decel Group is, aimed at democratizing venture capital. We believe this asset class has the potential to solve a lot of the biggest problems that we're seeing around the world. And we're trying to basically work with ethical and very, very capable people around the world in order to do that. And as part of Decel Group, we obviously have the programs arm, which is VC Lab. We do the accelerator, but we also do other programs. We help people learn how to invest in venture capital. We help people start a career in venture capital too. So that's the programs aspect. We have a Desal Hub, which is the platform that we're building for people to launch and scale their firms. So most of the emerging managers today are running their firms on Desal Hub. We have a fund of funds investing in some of the emerging funds that we're seeing. So it's kind of a very, wide ecosystem that we're building here, and we're rebuilding venture capital from the ground up, from the funds to the software to the funding to the limited partners and so on and so forth. And so, venture studios are becoming more and more prominent in the types of kind of funds that we are supporting here at VC Lab. And there's more and more kind of a kind of percentage of all new funds being launched being funds that are investing specifically in venture studios. And so, there's a huge kind of market shift here. We think it's super interesting. We want to go deeper, and we brought you probably the best person we could to kind of come and talk to everyone about venture studios. So, JT, thank you so much for being here with us today. So, you and your team are currently building basically the VC lab for venture studios, is kind of one way of putting it, but you're helping people build venture studios. You run a global trade association for venture studios. You're supporting emerging venture studios around the world, and you're currently also mentoring all of this venture studio new funds that are being built at VC Lab. And so, it's an honor to have you here at this event. I couldn't think of anyone better to do this with. So, could I pass over to you to further introduce yourself for everyone here?
I can try, but what you just said was just so incredibly kind and lovely. I'd be hesitant to mess it up, but sure, I'll give it a shot. First of all, thanks for being here. Hey everybody, I'm JT. So I'm part of an organization called the 9.8 Collective. um, we formed at the very end of 2022 and launched our business, and really from day one put venture studios kind of at the center of our ecosystem. And then we began to really build from there and listen to what this kind of emerging ecosystem or asset class needed, right? And so today, our ecosystem really involves the 9.8 Collective, which is where we help stand up venture studios, we help mature studios operate. What we're really building towards here is the operating system for venture studios. A venture studio, for anybody who doesn't know, is really a company that systematically creates companies, right? So it's different than other early stage value creation mechanisms or utilities that many are familiar with. So a big part of our job is just educating there, and we do that within the Venture Studio Forum, which Mirto, you alluded to, is a global trade association, a global community. Our goal there is to really define venture studios as an asset class, so that they're more commonly understood, and ultimately to unblock the flow of capital into the venture studio sort of ecosystem at large. And I'm super proud of the effort on the Venture Studio Forum front, because it has grown incredibly quickly, and it gives us the opportunity to really lift the ecosystem up at large. And I think you're wise to point to the comparison to VC Lab. We learned so much in going through the VC Lab programming. And one of the things that we identified there was that people really need to understand venture studios as a thing before they can operate with excellence or deploy capital into the model. And so we spend a lot of our time there. Just a little bit on the personal front. I live in Bozeman, Montana. I'm part of a team of 5, and we're spread out. One other here in Bozeman, 3 kind of spread out around the East Coast. We mostly work virtually with one another, and we support both within the 9.8 Collective and the Venture Studio Forum, a truly global audience of builders. I'm very, very happy to be here, by the way. Thank you.
Thank you so much, JT. That was amazing. Everyone, by the way, we want this to be an interactive event. So if you do have any questions, you'll see that there's there's the chat. Obviously, I know everyone's you're already in there introducing yourselves. Feel free to continue to do so. Share your LinkedIn, share where you're kind of dialing in from. But there's also a Q&A button. So if you want to ask a question to JT, put it in the Q&A and we'll float it up. So awesome, JT. So I just kind of wanted to, maybe start with, why you are so passionate about venture studios. What do you see in this space, and why is this such an exciting time to be in, launching venture studios or working in venture studios right now?
Yeah. Um, so I've been an entrepreneur a bunch in my life. And then I've also been like an executive within high growth businesses that were relatively early stage. And one of the things that I've kind of noticed in that time through the arc of my career is that if you're a creative sort of value creating person, your ideas evolve over time, and the system isn't always set up to support that, to support pivots, sort of reopening your aperture and adjusting course. And so I was first exposed to the venture studio model about 5 years ago, which is where I met 3 of my partners. And what I loved about the model was that instead of saying, hey, here's a problem, here is our solution, now let's go build that. A venture studio identifies a problem and builds a really strong thesis around it, and has the flexibility to take multiple shots on goal at serving that problem or that thesis. And I think that that's just a more flexible and higher potential way to go about solving some of the largest problems that we see. So one of the reasons that I love venture studios is just that ability to be flexible, to name the target, but to be relatively fluid in terms of how you address that target. Another reason that I love venture studios is that the model travels well beyond creating venture scale companies. This is a horizontal, it's a method for building companies that has begun to be shown to outperform other ways of building companies. And certainly there are lots of examples of venture studios out there who have gone out and built venture scale companies, IPOs, unicorns. But there are just as many examples that maybe don't get talked about as much, that create impact that maybe isn't measured in exit value or enterprise value, but maybe jobs created, economic impact in a city that you wouldn't necessarily think about as being a startup hub or a technical hub. And those impacts can be really, really impactful. Maybe not in creating a billionaire, but creating tens of thousands of jobs, right? Keeping people employed in a community, making it such that, university students, when they graduate, can stay in that town and continue to build and have gainful employment and be entrepreneurs. And so I love the way that the venture studio model travels across modality. I love that. Another thing I love about venture studios is I think it democratizes building companies, both in terms of a regional perspective, right? It removes some of that coastal gravity that we feel here in the United States and some of that sort of big city, big venture capital hub gravity that we see all over the world. Because a venture studio builds around a thesis and services that thesis, you can attach it to things that are different and maybe even more specific or particular to the region or market that you're addressing. So I love the flexibility of the model. I love the inclusivity of the model. I like working with borderline obsessive, creative, and ambitious people. And so if you think about building a startup, it's really hard, right? And it's enough to scare lots of people off. If you think about building companies that build lots of startups, there's levels to this, right? The game just gets tougher. And so I'm just, constantly in awe of the ambition and grit of the people I get to work with and support across our ecosystem. And that's one of the other reasons that I love the venture studio model.
Well, GT, I think what's really, one of the things that's cool about venture studios is that, if you just look at an entrepreneur that has a great idea, and kind of goes out and builds the startup, it just feels like such a unique experience. It's like you get this aha moment of, oh my God, I can't believe, that this would be an amazing idea for a company. And then you start figuring everything out and you fall in all the pitfalls and it's just like a unique experience of launching a fund. But with venture studios, you're kind of distilling that process and kind of you found a way to make that repeatable to get the aha moment and then to kind of launch the idea, make it into a reality and test right. And so how do venture studios kind of go from this ideation to product and company launch and scale in a way that makes these companies really successful? To your point, right, these venture studios are spinning out extremely successful companies at the moment. So how do they do it?
Um, that's a great question. So, in terms of how they do it from an ideation perspective, I will always kind of just anchor to thesis, right? Do they have a really well-defined problem that they want to solve, or market that they want to serve, or issue that they want to address? I think is a really key one. So there's this concept of invention and maybe this perception that there are these like really brilliant people out there who just come up with inventions, right? Out of the blue. More often than not, that invention is actually focused on a particular type of outcome or challenge or problem that the venture is facing, or that the venture studio is facing, or that the individual is dealing with. And so the first thing to do is really organize around target, right? What is it that we want to create in the world? What type of company? What types of outcomes do we want to create? Without that, without that kind of anchor, um, innovation, ideation can be actually very disruptive because it's too broad ranging. So the first thing you got to do is really anchor to some parameters, right? And so that's the first thing. The next thing is to really kind of take it in chunks. So it's very easy when you have a new concept or an idea that you've come up with to really get very attached to it, right? To form an attachment to it. So what a good venture studio will do is it will frame around that problem or that thesis, excuse me, and then it'll come up with a range of ideas, dozens of them, and frame them in a relatively consistent sort of format so that we can look at lots of concepts, lots of ideas, and begin to kind of sort through them. Right. That can be a relatively creative and enjoyable and fun process to kind of come up with lots of concepts. From there, the best move is to go review those and kind of reference them against the thesis and then kind of the model or the plan for the operation, right? And you got to go through a few questions, right? So like, why does the world need this to exist? Is the first one, right? What is the team's unfair advantage to bring this model forward or to bring this venture forward? That might be distribution, that might be technical acumen, that might be domain expertise, that might be really closely held network or relationships or something like that. But then, so that's the next question is like, why, so why does this need to exist? And then what does this team bring that's particularly special to it? And then the third piece is like, why is now the right time? Why is this moment the right time to bring this idea forward? And so what you see is this natural kind of funnel process taking place where you can go from dozens of ideas, maybe even hundreds, down to a shorter list. We could do, we maybe should do, we must do, right? You're forcing it through that funnel. And then what you get is a handful of really, really, value dense concepts that you can go test and validate. And so the next phase here is once you've kind of gone through the ideation is like, how do you test and validate that this venture needs to exist? And a venture studio can do that very cost efficiently and time efficiently because it's removing a lot of the distractions from the founders of the ventures that they might otherwise be dealing with. So what are some of those? HR, real estate, legal, DevOps in some cases, revenue operations in some cases. It really just it takes some of that stuff away, right? Those are not unimportant things, but the studio is providing the utility for them. And it lets a small founding team, 2 people, 4 people, go out and really build product, ship product, and then reconcile with the market. Does the market want this? Are they willing to pay for it? Is what they're willing to pay for it creating a unit economic basis for a really valuable business that can scale and reach default to live or get to its next funding round? A venture studio can do that very, very quickly by removing some of those important but distracting elements of company building.
Amazing. So, JT, for anyone here that has a thesis or a problem that they want to be addressing, you now just gave everyone the blueprint of how to successfully launch companies. How do you then build the venture studio itself?
Yeah, so the venture studio itself is an entity that is built to build those companies, right? So there's a few things that you got to do, right? The first thing you got to do is you got to map that thesis out, right? We'll always create sort of an anchor there. You got to be very thoughtful about that, all right? The second is you have to map out your ecosystem, right? So there's really 4 stakeholders inside of a venture studio ecosystem. There's the venture studio team, the team that is going to help kind of build and launch these companies and provide a lot of that utility that we talked about. All right. There's the funding for the studio itself, right? Venture studios are relatively cost intensive entities because they're fronting a lot of the cost and effort and labor to build. And so you got to go out and get the funding for that studio. Sometimes that comes from internal, sometimes it comes from a corporate, sometimes it comes from LPs, but you got to kind of map out that funding ecosystem. The next kind of stakeholder is the founding team, right? So who is it that is going to build these ventures, right? If you've got a staff inside the studio that is built to sort of support and kind of create all the infrastructure that can launch the companies, you still need single-threaded leadership to go take the companies to market. So what is that founder archetype? How are you going to find them? How are you going to attract them to the studio? So that's the next piece in the ecosystem. And then for ventures that are built to attract follow-on capital, right, that are going to require Series A financing or post-seed financing, mapping out the follow-on capital ecosystem or those stakeholders is the next piece. As you build that out, your studio plan is going to come into is going to come into clean view. Now it's time to build out the narrative to go share that story with those stakeholders, right? Again, anchoring the thesis, educating those stakeholders on what a venture studio is and how it differs from other models that they may understand. And then some on ramps for how they can get involved. And those on ramps are going to be different, right? For an LP, it might be a pact, right? For the studio's founding team, it might be an understanding of what their roles, responsibilities, and compensation will be, both in terms of salary and also their participation in the companies. For the follow-on investors, it's helping them understand, hey, here's what we're building towards. If we build it, will you come, right? Are you going to be the right kind of follow-on investor for us, right? Just sort of mapping that out. And then also thinking about the kind of commercial ecosystem that you want to build to support these ventures. What is distribution going to look like? How are you going to speed that? So building out that narrative is the next step. In parallel with that, you've got to build the operating model and the financial model for the studio so that you clearly understand how you're going to execute against your target, how you're going to launch these companies, and also how you're going to finance that effort. Right. So those are the ways that you do that. And within the 9.8 Collective, we're really working hard to create the operating system, frameworks, tools, even expert network that can help you do that. Right. Within the Venture Studio Forum, we provide a lot of that in more general terms so that the industry can sort of like anchor to it and use it on a more do-it-yourself basis. And then we also create community where folks can kind of share notes and compare and contrast their processes for doing it.
Amazing, extremely clear. Thank you so much, JT. So, um, there's different kind of models or ways to set up the venture studio. Could you talk a little bit to the formation and the kind of separate legal entities that you need to have?
Sure, I can. I'll give a caveat. I'm not an attorney. And so nothing that I would say here should count as legal advice. But there's just a couple kind of like core ways that this happens. The first is to set up a holdco and raise money into that holdco. And that's a little bit like raising money for a startup, right? You are essentially selling shares in the company that creates the ventures. And if you're going to build a studio that just needs capital one time, that can be a good way to go, right? It's relatively simple up front. It becomes more complex later as you want to inject more capital into the studio, perhaps launching in cohorts. And so the other model is what they call the dual entity model. And a dual entity model attaches a fund to the operating company, and it actually creates a total of 4 entities. But what that does is it creates a lever of governance between the capital and the studio operation and some rules of engagement so that there are sort of some clear thresholds and definitions for how capital flows into the company building entity and then into the ventures themselves. And so we see studios that look to be operating over multiple cohorts or multiple years, gravitating to that dual entity model where they'll build a fund. I suspect that the majority of studios that you work with will probably take the dual entity model because it really does require some education and some skill creation and processes around actually, organizing and raising and closing a fund.
Amazing. Yeah, that's exactly right. So, there's a lot of questions coming into the Q&A. I want to make sure that we get to those. But before we do,
Totally.
JT, thank you. A lot of venture studios, they kind of launch and quickly see that there is a massive opportunity to, fund the companies that they're creating. You talked about kind of, bringing in external funding for them as well, but they would want to kind of set up their own funds and participate in those rounds. So how does a venture studio do that? At what point is a venture studio ready to kind of launch a fund to invest in their companies? Talk to us a little bit about that, if you could.
Sure. Well, I don't think it's ever too early to start thinking about capitalizing or financing your studio, right? Um, at the moment that you begin to understand the impact you want to have in the world and the shape of your studio and the types of companies that you want to form, I think it's probably time to start mapping out your ecosystem and building out your model, your financial model and your operating model. That's going to provide a lot of clarity around not just how much capital you need, but also the type of partners you need in terms of accelerating the studio forward. And you can build from that sort of an LP archetype, to use some vocabulary that I'm familiar with from our time with VC Lab. You know, not just can I go get this money, but how are these folks going to be accretive to my overall mission? And so I think you got to start thinking about that very early on. In terms of when it's time to raise, this is a really kind of hot topic, right? One answer is as soon as you know what you're going to go build, right? As soon as you feel like you can deliver a sound and kind of well-defined thesis and target and explain your operation, and that's a good time to start thinking about fundraising and maybe even starting to fundraise. You see some studios do it differently, where they say, listen, I'm already on shaky ground because this asset class isn't particularly well understood. And so I've got to educate them on the model, and then I've got to get them to invest. What if I build one or two ventures through sweat, right? And begin to kind of get them off the ground. And that starts to feel a little bit like warehousing does when you're raising a traditional fund. But the difference is here, we're building it, right? We're creating that progress. And so in terms of like when to do it, I think a lot of it'll come down to what that studio team's advantage is in fundraising. If they have no track record, if they have no sort of connection to folks who would be eager to invest based on the idea itself, I think it's a good idea to start building your first couple of ventures, right? That can help sort of in the mind of the LP or the prospective investor, sort of like show progress and sort of some like concrete momentum around the studio, and that makes it easier for them to sort of ingest the opportunity. Whereas if somebody has like a really, really deep network, maybe they're an exited entrepreneur, um, who's already raised capital in their past, they've got trust built in the marketplace, they may want to get started right away. I think it comes down to a case by case basis. If you have that advantage, get started. If you don't have that advantage, go build it and then raise.
Amazing. One last question for me. In the meantime, everyone, I'm gonna jump into your questions in the Q&A. If you could have a look at the questions that have been asked and upvote the ones that you like. Obviously keep your questions coming in as well, but make sure you're giving us a sense of which ones you'd like us to prioritize. So JT, one last question for me. What kind of timelines are we looking at here? So for someone who's thinking of launching a venture studio, how long does it take to kind of get operational? And then same thing for those who want to attach a fund to it. How long does that process take?
Well, I think on the fund process question, I'll defer to you, as you guys are the very best at helping people to organize and raise a fund. I would say it takes as long as the VC lab programming takes, right? Um,
So yeah, so that would be anywhere between 5 months to get from kind of starting to fundraise and talking to limited partners about the fund opportunity to get to a first close, which means that the fund is now operational. You're actually able to start
mhm.
making investments. So 5 months is the minimum, but we've seen people take a year, 2 years, depending on the situation.
Certainly, certainly. So in terms of like setting up your studio strategy, your planning, your narrative, your financial model, your operating model, we've helped people pull that off in as little as a couple months to as much as 6 months. And so within the 9.8 Collective, we've created a couple of offerings that either kind of coach them through it over a 6 month period of time in a real kind of player coach model, or a more fast tracked option that helps advance it over a 2 to 3 month period. So yeah, I would say at the very low end, 2 months if you're really like full time on it and very, very rigorous about building up your sort of infrastructure to get that going. To 6 months if you're doing it in more of a sort of player coach model where somebody like us is mentoring you through the process, but you're doing it for the first time.
Amazing. Cool. So Aaron is asking, how do I go about raising funds for a venture studio? Do I pitch the different problem solution or the thesis and operators? JT, I know we spent 3 months helping people do this,
Mhm.
but could you give kind of like an overview answer to this?
Yeah, totally. And maybe I can anchor it to my own experience within VC Lab. So and by the way, I'll just kind of give a testament to the programming. I think the VC Labs programming is excellent. And what it really forced us to do was anchor to thesis and get out there and have conversations with prospective LPs very early. And in that process, we learned very quickly, actually, that there was more education required for the LP to get their head around the studio model. So in terms of how do you raise for a studio, the first thing I always do is I help anchor the prospects to what a venture studio is. I define it. I talk about how it compares to models that the prospect may be familiar with, and I draw distinctions. And then I frame what the performance can look like in venture studios as it compares to other models, right? Accelerators, incubators, top quartile performances from VC firms. So now they understand, hey, venture studios are a thing. They're a thing that's very different than some of the things that you might sort of heuristically compare them to or contrast them to. And they're a very powerful thing, right? I always start there. And I think you can get that done in 3 or 4 slides. And then I kind of like to take a moment and just level set, right? Kind of do a little barometer check with the prospect and say, like, hey, read it back to me. How do you understand this? If I feel like they've got a firm understanding of what a venture studio is, now I have a much better opportunity and format through which to explain our studio or what we're offering. And very often that is a pull function, right? It's not even a push sales function. It's like, oh my gosh, this is really cool. Tell me what you're building, right? So now you've gone from this like hat in hand, like kind of like mealy mouth, like here's what I'm doing. Do you want to do it? To wow, I had no idea. This is incredibly powerful. Sounds like you're building a studio. What is it and how do I get involved? So setting that stage was a major unlock for us. In fact, for the first kind of third of the VC Lab programming, we were in cohort 16. So shout out to anybody who was there with us. I was actually concerned that we weren't going to make it. Really, like the programming is rigorous, and we were struggling to get LPs to kind of like anchor on the idea. So the pack flow was a little lower than I had hoped. When we started doing this education programming, um, our performance went way up, right? To the point that we finished really, really well within the program. So I would encourage anybody who's going to raise for a studio to spend some time at the Venture Studio Forum. It's a free asset. You can join for free, and there's lots of great sort of framework definitions there. I'd use that to form the basis of your education of what a studio is. And then I would get into the traditional sort of here's my thesis, here's how we're going to build it, and here's how you get involved.
Amazing. So Narayan is asking, are you seeing any trends in terms of venture studios in particular sectors at the moment?
Absolutely. Absolutely. So some context here. We launched the Venture Studio Forum about 4.5 months ago. And we did so because we felt like this education was needed and that we needed to sort of aggregate the community and bring it together. Today, we're over 1,100 members from truly all over the world. And so I get to see a lot of data in terms of what folks are building, where, and how. And some key trends are coming forward. So a few that I'm particularly excited about. The first is the AI native studio, which is kind of a buzzword, right? But what I'll just say here is that the cost of validating a venture, planning a venture, and sort of confirming that the market is ready for it has gone down both in terms of money and time. So venture studios that are very tech enabled and AI native have a strategic advantage in company building that is emerging and growing really strong. So that's one. A second one that has my it just taps into my curiosity and my passion, and it's one that I'm very excited about and kind of proud of on behalf of the industry, is studios that focus on regional impact. I think it's just a huge opportunity. So what does that look like? Well, there's a studio that we work with in Abilene, Texas, which is kind of not thought of as a startup hub. Folks go to Austin, they go to Dallas, maybe they'll go to San Francisco, they'll go to New York. But this is a community that's got a ton of assets, and they're really sort of like a giant hidden in plain sight. So they're organizing their studio around building businesses that add value in their community. And there are dozens of those popping up all over the world. So that's another trend that I'm seeing. A third one that I'm equally excited about, I think is just such a cool opportunity, is the university affiliated venture studio. So there are research universities all over the world, and they do tremendous work understanding opportunities and creating IP. And that IP typically looks like a research paper, a patent, a report, a sort of like loosely framed MVP, something that's coming out of a research or a lab sort of utility. And for a long time, VC firms have said, yeah, I want to go back to those companies. The problem is they're not companies. They might be a patent, they might be an idea, a concept, as we just talked about. And so there's this tremendous gap, right, between capital that wants to fund these entities that are coming out of the brightest minds in research all over the world, but they need it to be a venture. They need it to be a little bit de-risked. They need it to be validated in a commercial sense. And so the studio that sits in between a tech transfer office, whether that's in a university or a government lab, sometimes even in a corporate environment, and that capital community is going to be really powerful moving forward. And then the fourth one that I'll say is what I would call um, a a community that might have been underserved in venture capital or in startup building otherwise can now form a studio around building around that community. So we see that in terms of underserved founders. We see that in terms of underserved geography. And we see it in terms of new business models that maybe hadn't been commonly understood, or old business models that were not viewed as attractive for venture scale value creation. Those are coming up as well. And so I guess the key theme here is a studio is a model for building companies, right? It's defined as a company that builds companies by playing three really critical roles. It's a founder or co-founder, it's an operator, and it's an investor. And so what's missing there is vertical. What's missing there is like type of company. Is it built for venture scale? Is it chasing alpha? Is it doing economic development? Is it trying to monetize research? Any of those things can be attached to it, and the studio model travels. So I just see these new sort of emerging studio opportunities just growing exponentially, almost like a hydra.
That's fascinating. And there's kind of a little bit of parallel too with what we're seeing, especially around that community part. So there's been funds starting in the US of, native communities that are setting up funds to invest
Hmm.
in native community founders, for example. And there's all sorts of like, kind of like a Christian or like a religious specific
Mhm.
religious group setting up a fund to invest in founders from that. Really, it's yeah. So it's really fascinating. All right. So Tamas is asking, at what stage do you know you have to bring in an external kind of founder or operating team to run the companies that you're building? And then how do you agree on the equity shares and vesting?
Okay. Both are very specific to model. So I can give some general frameworks. If we anchor it to a vertical market, it's a little bit easier. But typically, when it's time to build the company, to take it to market, I am a fan of having people who are dedicated to that venture doing it, right? So when it's time to go out there and get your first customer, to set up design partnerships, to really organize around that venture being a thing, I think it's probably a good idea at that point in time that there's a small founding team assembled, and that founding team is really just deployed on that venture. You can see sometimes that's people from the studio who step in as like an EIR or as like an early stage kind of like de-risker. But the sooner that a single threaded leader or leadership team is attached to the venture, the better, because they are going to be wholly incentivized to go get that done, right? There's this phrase, costs and benefits need to live in the same place. And so that venture needs to have its own costs and benefits, and it needs to go out there and kind of prove that it can go get the work done, and that it can actually build the venture to reach the target that's necessary. So that was the first one. Can you remind me of the second question? I think it was equity for the founders.
Yeah, exactly. So how do you agree on the equity shares and the vesting? Is there a generic model in the market for this?
There are some generic models. There's also some really trailing bias and sort of baggage that affects the venture studio ecosystem. There are some studios out there who have taken really, really large stakes in the companies that they incubate, that they launch, right? Um, that's really common in
Sorry, can you
ventures that have a,
sorry,
yeah.
what does very large stake mean?
Oh, we've seen it upwards of 50 in some really rare cases in the 80 range, right? And so that's very common in ventures that have really long incubation cycles. What that does is it makes it very difficult to raise follow-on capital because the studio's position on the cap table just feels so large and overwhelming for folks who might invest in it moving forward. There are also there are also studios, and this is more common today, who are taking a much smaller position in the venture because they're playing the chessboard. They're not playing the checkerboard, they're playing the chessboard, and they're saying, okay, if we're building a company for venture scale, we believe that it is going to have to go raise a Series A, perhaps a Series B, maybe even a Series C as it continues to scale. And so we have to make sure that the cap table reflects an ability to do that. And then the third element is we got to make sure that the founding team has an incentive to stick this out, right? They have to own enough of the venture to really feel accountable and like they have gravity to want to stay. So I like to talk about this generally because I think it's going to vary in any industry and based on the incubation cycle and the amount of capital required. So what I would say just as a general framework is as you map that ecosystem out, and we'll go back to that, really play out the chessboard as opposed to the checkerboard. What does step two, step three, step four look like? And who are you building this for, right? If you're building this venture such that it's going to get funded by a more traditional VC at the time that it spins out, then you have to really treat that entity as a customer. Your product is a validated venture, and how do they invest, right? What types of structures do they invest in? So what I would encourage people to do is really think about that and map it out and make sure that they're aligning to benchmarks. We have more information on this within the Venture Studio forum. And then within the 9.8 collective, we help people benchmark to what's reasonable based on the outcome that they're chasing. I'll shy away from really specific numbers in this one, and I hate to underwhelm or duck the question, but it's just too broad given the various verticals and incubation cycles that are at foot here or that are at play here.
Yeah, yeah. Thank you, JT. So Nikhil is asking, what's the attraction for a startup to enroll with a venture studio? And we touched on this a little bit before, and you said how, there's a whole kind of strategy that you need to think about around kind of building these teams around the ventures and kind of who the founder is going to be. I love if you could just give us a glimpse into what that could look like. And then going back to Nikhil's question, obviously, what's the attraction on the founder side?
Mhm. Sure. So I'll start with just a clarifier. A venture studio very often builds from within, right? So in some cases, they are not open to outside founders coming in and saying, here's my startup, I want to pitch you, right? They might actually be building it from the studs up. Other venture studios are much more open to outside ventures coming in and going through the studio process. And then there's lots of hybrid models. There are reasons why each of those are attractive and a good way to build companies. I had Mike Jones from Science Inc. on my podcast on the VSF a couple weeks ago, and he actually said something really interesting. For those who don't know, Science launched Dollar Shave Club, Liquid Death. They've been responsible for a number of kind of unicorn outcomes and really very, very valuable businesses that have come out of the studio within the D2C category. Um, what Mike said was our our best like early stage performance and systematic performance has come from internal ideas where we built the concept and then found a founder. Their biggest outcomes have come from external ideas where a founding team came to them and said, hey, here's what we're building. We'd like to be a part of it. And so there's no one size fits all. I would just like encourage people to kind of be thoughtful about that. In terms of why it's attractive as a founder to build within a venture studio model, for me, it's really simple. Um, Founding a company is really hard. I've done it a few times, and I was always shocked by the number of things that I had to do every day before I could just go build my venture, right? Before I could go talk to customers, sell the product, refine the product, and really kind of build that sort of validation for the venture. And a good venture studio is going to take a lot of that administrivia and company building that isn't related to the venture's de-risking away from that founder. They're going to provide that utility. So for me, that's really attractive because I can take my focus and really distill it on what matters most: build product, ship product, reconcile with the market, and get a unit economic business that is built to scale.
Amazing answer. So Aran is asking, what are your thoughts on building VC/PE AI-based roll-ups in professional services?
Sounds cool. I can't say I can't say a ton more because there's just so much more specificity that would go into the model. I will say this: venture studios are really actually similar to private equity in the sense that they maintain a degree of control in building the venture at the early stage, as opposed to traditional VC investing, where you're placing a number of bets, but you don't necessarily have operating control. So there is an analog there between private equity and venture studios that doesn't get talked about enough. A good way to think about it is it's like PE, but at the build stage, right? And so I like the concept. It seems like a really interesting one. I'd have to learn more to be able to opine more deeply.
Awesome. So Noraya is saying, in your view, what are some core ways that venture studios differentiate themselves to best attract founders and other talent?
Sure. Um, the support they provide, right? What is the unfair advantage that the studio provides to a founding team? That can be distribution, that can be core technical acumen, that can be deep pockets, that can be, a really strong follow-on investor network. but like, what is the support that this entity provides and the value add? That's the first one. The second one is cultural. Building a startup is a really hard thing. It's very lonely. And having a community of folks who have done it many, many times before, who are maybe not intimidated by some of the challenges that you'll face as a startup, or maybe have pattern recognition to say, hey, I see where you're going. I've been there before. Let's make a couple minor tweaks or adjustments, and we can kind of avoid that mistake. I was with a studio founder earlier this week. We spent a day together, and at the end of it, the comment was, I really just think you've seen more sort of from an operational data perspective and performance data perspective. And if you can help me avoid mistakes that are avoidable, right? Things you've already seen, use that pattern recognition to help us not make mistakes that are avoidable, is another one that a studio provides.
Amazing. So Aran is then asking, does VC Lab have a venture studio program, or is it the same program covers both? So let's just kind of go through this very quickly. So VC Lab helps people launch funds. And some managers are launching funds, but they happen to be running venture studios and they want the funds to invest in their venture studio startups. And so if you're launching a fund, whether as part of a venture studio or not, VC Lab can help you. But now, JT, you're also helping people get venture studios off the ground,
Mhm.
even before the fund is launched. I don't know if you want to say a few words about that. I know you touched on it earlier.
Yeah, I would just say that, we've really oriented around supporting studios in every way we possibly can, right? And I see the asset class kind of like a little smoldering campfire right now, and we've got to feed oxygen into it and make that fire bigger so that more people can sit around it and get value from the heat that it generates, right? So how do we do that? Well, within the Venture Studio Forum, we provide a lot of those tools and systems and frameworks in a more general sense for folks who are like specifically interested in having help and support building their studio or operating their studio. At the 9.8 Collective, we're building that operating system, and then we attach our expertise onto that in such a way that we can kind of meet studio founders and operators wherever they are in the process and help them do it in a more systematic and scalable way. So I think VC Lab does a tremendous job on the fund side, and we've kind of built our ecosystem such to help with the blocking and tackling of organizing, designing, planning, and operating your studio, with a real focus on providing the tools and systems and frameworks so that you can do the work.
Awesome. Thank you so much, JT. People are kind of asking where they should go to find out more about kind of the, the various kind of resources that you're
Sure.
referring to.
Yeah. So venturestudioforum.org is a great place. If you're not already a member, please join. Again, it's free, and there's a lot of resources and community there. Joining isn't enough. Get in there, comment, talk, tell people who you are and what you're focused on. Don't pitch. That's the rule, right? Just go out there and kind of add value and communicate and engage. And I think there's abundance to be had there. So that's a great place to start for the studio curious. For folks who are like struggling with, all right, cool, that's helpful, but I need to start building and I need help building. The 9.8 Collective is a great way to begin that process. And so that's at 9, the number 9, the word point, the number 8.co, 9.8.co. And if you want a personal connection and you just want to chat, a good place to find me is on LinkedIn. It's just JT Benton.
Awesome. I got those links in the chat there. Cool. So we're coming up to the top of the hour. This has gone by extremely fast. Let's do maybe one more question and then we can wrap up. I know you probably have a ton of calls, so I want to make sure that you have a couple of minutes to breathe before you jump on those.
No worries.
Um, okay, so Rayo is asking, what are the key economics for a venture studio and the life cycle and the tenure and life cycle? And related to this, do they have a traditional VC 2 and 20 model? Pros and cons from JT's perspective. Sorry, that was a lot of questions in one.
That's a good question. It's
Yeah.
it's 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 one that in 4 minutes will have to be a little bit truncated. Um, the key economics of a venture studio are its ability to create value at the early stage. And from an LP's perspective, how I would look at it is cost per equity point in an early stage venture as being low enough at the company formation stage that I have a significant advantage to invest now in a team that's going to go build those ventures, as opposed to waiting for them to be de-risked, right? So venture studios attach really, really consistent frameworks and systems to build companies. And so they do a better job building companies to the point that they can receive their follow-on financing or even exit velocity. So the reason to buy into a venture studio is you're buying into a utility or a system that is going to be more effective at building companies and de-risking them faster, right? And so a great way to frame that is to talk about the cost per equity point, and then sort of attached to the model's greater performance for getting those companies validated.
Amazing. JT, do you have any kind of closing words of wisdom or advice for people who are wanting to kind of get involved in venture studios? Either they're launching their own or they're investing in the companies or they just want to work at a venture studio.
My advice would be to do it. I think this is a I think this is a revolution in how companies are being built. I think this is an unbelievable moment. The evolution of emergent technology, the evolution um, of company building through this model, and the ability to do it sort of where your feet are and not be pulled to these historical centers of gravity in startup formation and venture capital, um, to me is a mini industrial revolution. And so, if you're the type of person who has sort of an N is greater than one philosophy, which is to say, hey, I see this problem, but I believe that multiple attempts to solve that problem is the right way to go. I think that the venture studio model is the very best way to do it. And I think it's better than the other models because of the efficiency and utility it creates by building from within and organizing around common governance, common financial modeling, consistency.
Amazing. What an amazing way to wrap this up, JT. Thank you for all the work that you're doing in Venture Studios. Everyone, if you enjoyed that, get involved in the community. This is probably the largest venture studio community there is globally, at least that I know of. So get involved if you're launching a fund. Make sure to check out VC Lab. You will meet JT again there. JT, thank you again so, so much. This was wonderful. All the best.
Thank you. Thanks, everybody. These were great questions. I'm eager to connect with folks offline. And Mirto, thank you for having me.
Thank you. Bye, everyone. Till next time.
Bye.